Hi there, welcome to Kneppy Invest. My favorite type of announcement by far is a trading update released by a company, particularly if that trading update is a profit upgrade or a profit downgrade, because those are the most powerful type of announcements a company can release. And usually, not always, when a company does release a profit upgrade or downgrade, we can see a significant shift, an immediate shift in sentiment around that company. Seen this time and time again. Sometimes these are the catalysts that you are looking for to take a position in a company or sell out of a company. Another reason I do like trading updates, it does give a sense on how the company is performing and what's driving the performance of the company in terms of economic conditions. So that's another reason I do like to look at trading updates. Every single day, I am searching for these type of announcements. And on June 14 and 15, four companies did release a trading update. And in this video, I'll go through all four trading updates. Now, it is unusual, in my opinion, that we are heading very close to the end of the financial year and companies are still releasing trading updates. I would have thought by now, most management teams of companies would know how the company is performing. That's not entirely true. In fact, one of the companies I'll be talking about mentioned we've seen 11 months of the year, and now we're confident how we're going to perform for the financial year because we're only a few weeks away from the end of the financial year. And the very fact that three more companies today, on June the 16th, I am recording this video at 9:40 a.m., have released trading updates. Australian Ethical Funds, Hum, and the Reject Shops. I won't be talking about those three companies in this video. So what were the four companies that released trading updates on June 14 and 15? And all four trading updates were not bad. In fact, a couple of them were quite positive. So these are the four companies I'll be talking about in today's video. CTI Logistics, COG Financial Services, Coventry Group, and Universal Store. The majority of these companies are quite small, but these trading updates the companies did release were quite positive, particularly CTI Logistics. I think even COG Financial Services was quite positive. Coventry Group released a positive update, and Universal Store also released, in my opinion, a positive update, even though they are in that sector of the stock market that should not be performing all that well, discretionary or consumer discretionary area. You would be thinking, so most of these retail companies would be suffering right now because of really low consumer sentiment, but it seems like Universal Store has been performing quite admirably. So let's talk about the first company, which is CTI Logistics, and this was a positive update from the company. Now, CTI Logistics does provide transport, logistics, and business services. Company's been around for about 50 years, so they do have courier drivers, those sort of things. And funnily enough, they did release this trading update at 3:25 p.m. on the 14th of June. So that was that really tough trading day when shares were down 5% on open. And I think they closed about 3.5% down for the day. For some reason, CTI Logistics decided to wait to the end of the day to release this announcement. Now, that could have been strategic. Maybe they didn't want to release this announcement at the start of trading because the market would have probably ignored this trading update. But the share price of this company actually dropped to about 84 cents at the start of trading. And when the company did release this trading update, the share price popped up to $1. So the market did view this trading update quite positively. And you can see why, because it was a positive update. And they are actually benefiting from supply chain disruptions and COVID. So this is one of those companies that is benefiting from the times we're in. So they've not upgraded, but they've released guidance in regards to profit before tax. And they mentioned that they are expected to see profit before tax by about 65% from last year, and that there is some strong revenue growth, and annual revenue is expected to increase by about 15% from last year, up to about 275 million. And they've also described what has been causing these improvements in the performance of the company. So they've talked about increased freight volumes, increased usage of premium freight services driven by supply chain disruptions, and the ongoing impacts of COVID, plus special projects in both transport and warehousing. They also mentioned there is still a lot of uncertainty about the future in regards to supply chain disruptions and COVID. And they just said that those uncertainties could still affect the company over the next or the rest of the calendar year, I think they said. So this was a positive trading update from the company, and the market did react quite positively. So let's have a look at the chart to see if this is a potential buy for those who are interested in this sort of company. And CTI Logistics is actually in an uptrend right now. And this goes back to August 2020. Share price has increased from about 45 cents to a high of $1.15 a few months ago. Share price has pulled back to the uptrend line. In fact, the share price fell briefly below the uptrend line on June 14. In fact, it fell all the way down to 84 cents and then recovered all the way back up to $1 upon release of this trading update. And then on the 15th of June, share price actually did fall to 96 cents and finished trading on that day right on the uptrend line. So a potential buy here because the share price is moving up in an uptrend. There is positive sentiment behind this company, and the company also released a positive trading update. So not much to not like about this company. It is small. I think the market cap is less than $100 million, but this company is profitable and they are growing. The question I think you could ask yourself and maybe even ask the company is how much longer will these tailwinds keep on lasting? The next company that released a trading update was COG Financial Services. This is a finance broker, aggregator, and equipment leasing business for small to medium-sized enterprises. This company is profitable. They have a market cap of about $300 million, if I remember correctly. And they released this trading update in a presentation they gave at the Macquarie Emerging Leaders Forum on the 15th of June 2022. I think this was found on page 9, and this was a forecast in regards to net profit after tax and amortization. And this company is growing based off those numbers or the range of numbers they have given us compared to financial year 21. So in financial year 21, that profit was 19.5 million. Now they're expecting profit to be between 22.5 and 24 million. So this company is growing based off last year numbers. The valuation is not too stretched, $300 million. And so a lot to like about this company in regards to their financial performance. So let's have a look at the chart to see if there's more to like in regards to the sentiment and the share price movement. And generally, the share price of COG has been going up over the past few years. This chart goes all the way back to March 2021. Share price back then was around about $1. Share price has reached a high of about $1.82 a few months ago. Now, the last two trading days on June 14 and 15, share price of this company has been under pressure. So in a way, the market did not really, I won't say like this trading update, but they didn't really appreciate it. But in saying that, we did see a little bit of selling, and then we saw a lot of buying coming in. That's why the last two trading days, we have seen some long tails, a couple of long tails on the candlestick. And when you ever see a long tail to the downside on a candlestick, that is telling you that there is a lot of buying coming in. Someone sees the share price fall, and in COG's case, it fell to $1.32. When some participants in the market sees the share price of this company fall to $1.32, they think that represents good value for the company, and that's why you see a fair bit of buying coming in. Share price actually closed at $1.46 on June the 15th, but share price is below the two moving averages, so this does represent possible a good buying opportunity for those who want to buy the dip. At this point in time, I don't know a lot about this company, haven't really looked too deep into COG Financial Services, but the chart looks good, financial state of the company looks good, so not a lot to dislike about COG Financial Services. The third company that released a trading update was Coventry Group. This company released that trading update on the 15th of June. And to be honest with you, when I saw the title of this announcement, I thought it was going to be negative because the share price has fallen a fair bit, maybe about 33% over the past few months. And I think the market was expecting some bad news from this company based on the share price movement in recent times. But when the company did release this trading update, and full-year forecast as well, it was not negative. And actually, the market did react positively to this announcement. So what does Coventry Group do? Well, they deliver innovative industrial solutions to the mining, construction, and manufacturing sectors. They supply a range of fastening systems, cabinet hardware systems, hydraulics, lubrications, fire suppression, refueling systems, and other products. So let's have a look at the trading update. Now, they gave forecasts numbers for revenue, EBITDA, and net profit before tax, not after tax. So it's really interesting to see what numbers companies do provide. You usually see revenue, EBITDA, sometimes profit. Not a lot of times you will see net profit before tax, but all three metrics are growing from the midpoint of financial year 21. Revenue is expected to be between 315 and 325 million, up 11% on last year. EBITDA expected to be between 15 million and 16 million, up 16% from last year. And net profit before tax expected to be between 10 and 11 million, up 14% at the midpoint, or higher at the midpoint from financial year 21. In the commentary, they also explained why they're experiencing this growth in the company. And I always want to see this in commentary. What is driving the growth, or what is driving the slowdown in the company? And they just mentioned that this growth has been driven by the company's strong value proposition. That's a bit iffy. Activity in key market sectors, acquisitions, and diversification into new markets. So what's been driving this growth in the business is not what's happening in the economy. It's the decisions the management have made over the past few years. And that's really exciting to me, to see growth in the company not being explained, or the slowdown in the company not being explained by troubles in the economy, but because of this decisions made by management in the past. So this is looking good for Coventry Group. This trading update looks really good. 4-year forecast looks really good. So a lot of ticks here for Coventry Group. Now let's have a look at the chart to see if the share price is in an uptrend. And if it is in an uptrend, that could be even more exciting news for Coventry Group. And unfortunately for Coventry Group, the last few months for the company and its share price has not been positive. Share price has gone down from a high of about $1.82, $1.83, which was reached in January 2022, all the way down to a current share price of less than $1.20. So share price has dropped about 33% in a short period of time. So share price is in a downtrend, and there is negative sentiment around this company right now. Now, with a market cap of about $100 million, if the share price can fall, say, to about 50, 60 cents, this company would be looking awfully cheap, particularly if they can maintain growing over the next few years. And if there is real driving force to drive share price of companies like this down further, that's when I think this company would be heading towards really deep value. And if it moves to that point, that's when this company would be looking really exciting. Just the very fact the share price is in a downtrend right now, I would not be interested myself in buying or taking a position in this company, just because of that downtrend or share price in a downtrend, and the fact that there is negative sentiment in this company and the overall market right now. The last company that released the trading update, and they also released a financial year 22 guidance, was Universal Store. If you don't know what Universal Store, they are a fashion retailer operating throughout the country. They sell international and national brands, and they specialize in streetwear, denim, skate clothing, and surfwear. Founded in 1999. I have never been in a Universal Store, and more than likely I will never go into the Universal Store, but I am not the sort of person that Universal Store are trying to sell their products to. Anyway, the company did release this trading update and the guidance for financial year 22 in a Macquarie conference presentation on June the 15th. So let's have a look at the trading update. Usually when I look at retail companies, I want to focus on like-for-like sales, but interesting enough, in this trading update, they actually did mention that like-for-like sales are less insightful measure as the year progresses, and when we again cycle periods of material store closures in previous or prior years. So I'm not sure if I completely agree with management in regards to like-for-like sales being less insightful. I think it is the most important measure in terms of how a retail company is performing. But anyway, let's have a look at the sales growth. Up 6.9% on the second half of financial year 21. Online sales are growing, just like many other retail companies, up 27.3% on last year, up 119.3% on 2 years ago. And despite 25% of trading days being lost in the first half of this financial year, sales are only down 2.3% on financial year 21, and like-for-like sales are down 2.8% versus previous corresponding period, and up 28.7% on financial year 20. And they anticipate sales to be between 205 and 207 million down from 211 million in financial year 21, and underlying EBIT to be between 30 and 31 million, down from $44 million in financial year 21. So even though they're expecting worse numbers than financial year 21, this was probably to expectations. There is no way there's going to be many retail companies that are going to perform better in financial year 22 compared to financial year 21. So these numbers being down is to expectations. And that's one of the reasons why the market went up a little bit. The share price went up a little bit for this company, because I think the market was actually expecting worse numbers from Universal Store. Not only that, the share price has fallen a lot over the past few months for this company. So let's have a look at the chart for Universal Store right now. And this is a great chart from Universal Store. This goes all the way back to when they listed on the ASX in November 2020. And there was a lot of positive sentiment behind this company from when they listed all the way through to about October. You'll say October 2021. In fact, the share price rose from about $4 or $4.20 all the way to a high of $8.60. So there was a doubling in the share price because of that positive sentiment in retail. Financial year 21 was really good for retail companies, and the market came to the realization that financial year 22 was not going to be good for retail companies, and that's why there was a shift in sentiment, and there was a shift in the trend of the share price. Share price moved into a downtrend around about December of last year, and the share price has been falling ever since. In fact, share price has fallen from about $7.50 to a current share price of $3.40, and the share price right now is lower than it was when the company listed on the ASX. So as the share price of this company keeps on falling, it becomes more and more attractive. And this is true for many retail companies right now. There's a lot of negative sentiment in these companies. Share prices are in well-defined downtrends, and the only question is, how low can these share prices go? And the lower they go, the more attractive these companies get for a lot of investors out there, and that's when you might start seeing buying coming in. We aren't seeing a lot of buying right now. In fact, the most volume we see in these retail companies are on those big down days, and that's not a positive sign. So at this point in time, I am becoming more and more interested in some retail companies because there is a possible value opportunity heading towards us as the share prices of these companies keep on falling. That's all I have for this trading update video on 4 companies that did release a trading update on June 14 or 15. And in fact, all 4 trading updates were in a way positive, particularly CTI Logistics, Coventry Group, even Universal Store. Even though we are seeing lower numbers than last year, I think they were not as bad as the market expected. And even COG Financial Group, those numbers were actually quite good from that company. So 4 positive trading updates from companies on the ASX, which probably you could argue that is unusual when there is overall negative sentiment in the market. If you do have any questions about these 4 companies, whether you like these companies or not, I'd love to hear from you. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.